Welcome to Property Showcase, the podcast that brings you closer to the service providers that can inform your decisions about how you buy, manage and research top investment opportunities. Be informed and become a better investor with Property Showcase.
G'day everyone. Welcome to another episode of the Property Showcase. I'm your host, Tom Gilmore, media and marketing strategist here at smartpropertyinvestment.com.au. Guys, you know what this show is all about. It's the best property podcast out in the country at the moment. And we like to really sort of get down to the grassroots of property investing and breaking it down for you guys and obviously giving you the goods in terms of what the best strategy might be, what areas of the market you should be looking in around the nation. And the only way we can sort of have these topics of discussion is essentially by the people that we partner with. The gentleman I have in the room today, he is the director of InvestorKit. He is the host and owner of the Property Nerds. He is a buyer's agent that I've seen operate now for, I suppose, at least the better part of, 2.5, 3 years. And what he's been able to achieve in the different markets around the nation is truly something spectacular. And he actually has come in today to share his knowledge. And today's episode is going to be about succeeding in the current market. Arjun, how are you going?
Good to be on again, Tom. How are you?
Yeah, mate. I'm excellent, especially after the past 2 weeks where I sort of lost my voice. Eric did really get the better of me. But,
I think I'm swapping places with you on the voice now.
Oh, no, mate, please, don't get sick. But no, mate, things are going well. Busier than a caterpillar tying shoelaces at this rate. But, mate, you've got some points that we're going to break through down today for our investors tuning in. I'm going to run through them very quickly, but we're going to break them down one by one. So we've got here comparative analysis framework. I'm pretty keen to knuckle down that with you. Market pressure analysis, agent relationships, and speed and conditions. I'm going to start with number one, comparative analysis framework. What does this mean?
So, Tom, with comparative analysis framework, I would say this is the most important piece in the current market. Now, the buyers who are feeling pain right now, and when I say pain, I say missing out constantly, weekends, late nights, driving from open to open, and just getting fatigued and disheartened by the amount of people at open homes and how quickly properties are going. So with a comparative analysis framework, we're ripping out pages now from the Valuer's Playbook. I am super blessed that in my team, I've got the ever fabulous AJ, who is our head of acquisitions, and him and I regularly discuss the framework of comparative analysis. Now, to just go through what that framework actually means, there's, analyzing a property's external, internal, neighborhood, recency of sale or recency of activity around it, and then also just the overall location and due diligence that goes around kind of floods, main roads, all those different factors.
Yep.
Now, when you put all of that together, you can apply rating scales. And if you apply, the Valuer's rating scales, we've got superior, slightly superior, similar, slightly inferior, inferior. So imagine you going through various comparable sales. Recency is more important than ever in this market, which I'll touch on. But when you're going through all these comparable sales and applying a framework to it, you actually now bring science to the world of property. And by doing that and factoring in positioning and all those different things I talked about, and having labels, those 5 ratings, you end up having a picture in front of you of A, a floor, and then B, a roof. And this gives you this floor and roof where you go, there's no way this property can sell for less than X because of all of these other places that were slightly inferior or inferior.
Correct. Yep.
And there's no way this place should sell for more because that place is so much better, sold so recently. And the reason why it's better is because neighborhood, internal, exterior, so forth. So now you're not playing a guesswork of what to pay for something. And this has made a huge difference for the clients we work with, being able to avoid overpaying, but also being able to actually secure properties in this market, which is the end goal. Now, when it comes to the securing rate, this is where things get pretty serious for us. Our conversion rate at the moment from offer to purchase is sitting at 55%. Now,
really? That's pretty impressive.
That is huge. And I wouldn't have done it without AJ, but I mean, this simply means that, every 2 offers we place, we are getting one.
You are getting one.
Right? So comparative analysis framework goes through those points I've mentioned, recency. And recency in now is more important than ever. You looking at sales of 6 months ago It's very challenging. You need to be looking at sales now, listings now, and what requires a bit of roll up your sleeves and get on the phone calls is your for sale and under offer. For your for sale and under offer, these are the properties that require calls to agents to try and squeeze out how much did it go for, and trust me, it's not easy. This is an art form to be able to connect with them and really try and get that information because they don't want to give it away in case contracts fall over. So these key pieces are how buyers can truly succeed in the current market and actually apply science to their searching process and not feel like they're constantly getting fatigued from missing out.
So that last bit in itself, cumulatively altogether, but that last bit in itself, time is our enemy. Now, I could probably start myself and go on my way. I'm trying to think of me being the investor here or the home buyer. You could start and go off and be like, oh, okay, I need to go do this and work all this out. But I imagine there's probably a formula that you have and, call it an Excel spreadsheet or however it is you bring it together. Are people able to get their hands on that at all, or is it more of working with you case-by-case basis?
Yeah, so in terms of the comparative analysis framework, that's more of a work with us in the InvestorKit as our buyer's agency. But that actually leads me on to the framework that we do have when it comes to understanding markets today, which is market pressure analysis. And this is where we do have a little bit of a giveaway on that front, which I'll jump into in a second. But market pressure analysis is now going, okay, I now know how to attack properties on an individual basis. The framework we discussed before, rating scales, recency. But what's commonly missed now is something called indexation. So indexation needs pressure to be understood. And so when you're analyzing market pressure, it helps you connect the dots with where properties may be going when you index them. To give you some context, we know that, Sydney, Adelaide, Hobart, Canberra, and some of our regions have had a phenomenal last 12 months. And, some have moved up 2% in the last month based on some of the data. So if you take a 600K property and move it up 2%, now, it's not an exact 2% on every property. It could be more or less, but that's $12,000 within that 1 month. So if you're looking at what indexation means, is that if you find a similar property from last month's comparable sale that went for 600, there's a chance that today it may not be for 600, even though it's comparable. So this is where that indexation helps you go, should I be maybe 610 to 620 to factor in some of the movements based on some of the comps. So using market pressure analysis is where we deep dive into inventory levels, both where they are now and the trends, days on market, vacancy rates, yields, and on the ground. So when you put all those together, what are they telling us? How much is the relative demand to supply that exists? The level of rental return for your asset, the speed in which properties are transacting in the direction, faster or slower, and lastly, is it likely to rent easy? So if you think of it as an investor, that's what you want to know.
Absolutely.
Am I going to get good growth? Am I going to have a property rent fast, rent for a good amount, and move quickly? So this is where we have that available currently. The market pressure analysis is a free report that we've put together in our market index conditions report. That's available at thepropertynerds.com.au. So propertynerds.com.au for our market conditions index report. And if you're looking at your own suburb or suburbs that you're looking to buy in, you can type that in and you'll get the result of all those key pressure analysis for free.
Excellent. And also just on another side note, guys, if you do want to find another way to find Arjun, you can go into the smartpropertyinvestment.com.au website. You can go to the podcast tab and you can find the Property Nerds there, and you can actually get in touch with Arjun and ask any question you'd like from that portal there on that landing page too. Arjun, before we get into our sort of next point, some of the key terms and data points that you were speaking of then, these are trends and things that investors need to be thinking of, or that I would personally like to know 24/7. I would like to know from you, based on your bird's eye view of the market in Australia, and I suppose tie it into the areas that you do work in at an InvestorKit, has there been sort of markets that have just truly shocked you just based on using this method and how you go about things, and you go, wow, there's just no way you would know that or anyone would know that about this suburb or this particular region, that you've just gone, whoa, that saved a lot of people a lot of money or made people a lot of money?
Really good question, Tom. So that really was a surprise for us when we looked into the variation of growth from the top end to the low end of markets. And so what we actually discovered was that the inventory analysis was truly the lead indicator for what we saw in these markets. So to give you some, context, below 3 months of inventory saw an 18% average 12-month growth. It's ridiculous and life-changing, right? So imagine, you had markets with that high pressure sub 3 months inventory this time last year. If they sustained the inventory, which most of them have, you would have seen close to double digits or double digits, coming towards the 20% plus. And then on the flip side, we've seen high supply, high inventory markets trend down, and they've still shown growth levels of 4 to 8%. So what that means is whilst we are in a national boom, this variance between high performance and low performance still exists. So again, coming back to that market index report, if listeners are grabbing themselves a copy of that, it's totally free, but for a limited time only, it's free. When people jump on that, you can check your suburbs inventory, the region's days on market change, and these sorts of things will really help us succeed in the current market because it'll really tell us, are we moving into a already hot, low inventory market and we have to use indexation more than ever? Or are we in high supply trending down and places are selling quickly, but not for over what they're asking for? So this is where speed doesn't always have to be combined with a high price. It just needs to be analyzed further.
Okay, excellent. Thank you for sharing that. Agent relationships. Explain.
So friends, relationships,
friends, that's it.
what who you know, all these things are now starting to come together. It's great to have market intel, data, be on the ground, understand frameworks. But the truth is property is a people's game. It isn't really a property game. And even before you talk finance or property, having these people relationships can make a big difference. So when it comes to our end as a business, we're very fortunate to have purchased hundreds of properties. And what that does is it leaves a trail. When you have a trail, you have a trail of relationships. You've made an impact to a vendor's life and in turn a sales agent's life. And then what happens is the number of deals you have with different sales agents increases that relationship more. So this leads to properties that are not on the market, but this also leads to properties where things may be close and you just get that extra edge of information. So whilst buyers, I understand, may not have access to all of these relationships, there's a few things that they can do to be able to enhance the relationship building they have with agents, especially in this current environment. And especially if they're only transacting once, this is the most important relationships that they'll need to make.
Correct, yeah.
So the 3 points I have is communication, compliments, empathy. Now, when it comes to communication, constant communication is key. Yeah. Some of the agents in the network that we talk to often share with me their phone time, and it's ridiculous.
Yeah, it's like this, just constant.
It is ridiculous. Some people, honestly, I would love to give Christmas gifts or end of financial year gifts of headbands or something where they can attach the phone to their ears. They have on times 4 to 6 hours of phone time in a day sometimes.
Yep.
And on an 8-hour day or a 10-hour day, that's more than half of your day that is dedicated to a phone to your ear. So this is where the communication being constant is all about not being forgotten. It's gotten to a stage for us that we want to avoid being forgotten, that we're hiring people specifically in the team just to communicate with sales agents. No reports, no data, no client work, just being in communication constantly with sales agents. So moving on to compliments.
Feeding the ego, is that what that means? Or
in a way, yes. I mean, some people want to celebrate their listing, even if you miss out. And I've learned that, the 1 and 2 doesn't mean we get every property. Mm-hmm. So when we don't get a property, it means that sales agent's done a phenomenal job because we've done our job in putting a comparative analysis. We feel it should sell within a certain range. And now the sales agent's achieved more than that. So for them to do more than that isn't always a work of the market because we're anticipating the market within it in our comparative analysis. This means the sales agent has genuinely delivered for the vendor.
Yep.
Now, I'm going to be upset in one part because we missed out on a great property. But the other part of me has to realize that there is a person who's been working their butt off on the other side. Let them know it's a good job. Yep. And so simple things like, hey, look, I just wanted to say well done in your campaign.
Yep.
I would have loved to have secured this property. It's unfortunate that I didn't, but your vendor's paying you money and you've done a good job. So I just wanted to say that. No agenda, no asking for the next one. Just let it go.
But sometimes that can really turn things around the next time you're in contact with that person.
Of course, because being genuine is the biggest difference maker.
Absolutely.
And if you constantly think from putting your foot in the other shoe and you think like, okay, if I was the vendor, how would I feel? That's where genuine comments come out from. Just put yourself in the other shoe. So whether it's a well done on the speed you sold it for, whether it's a well done on the price, or whether it's the video was fantastic that you put up, it really gave me a good feel.
Yeah.
You know, the photos are great, but when we visited the place, it was just as good as the photos. So things like that make a big difference because you need to be remembered. And are you going to be remembered by the when's your next deal? What do you got? What do you got? What do you got?
Absolutely.
Or are you going to be remembered for the moments that you say, hey, look, if I was selling my place, this person's pretty good.
Yeah, absolutely.
Now, when it comes to empathy, this is a pretty important one. You know, I think empathy is not about, you know, you giving it to them, but it's actually sales agents can be empathetic of someone missing out constantly. But are you constantly being aggressive or on the hunt for the next one? Or are you being open and vulnerable to say, look, I missed out here and I missed out a few properties and I'm really trying to get this next one and would appreciate you letting me know anything that you could prior to listing it online or as soon as possible or giving me as much information. I just want to reduce the times or it's taking us or how much we're missing out. Those moments and you being vulnerable and open to a sales agent from the empathetic point of view, they do care. I know it can feel sometimes like they don't because they've got a ton of buyers and, you know, things are in their court right now. But very few people are willing to say, look, it's been tough. And so this is a market that has been tough for many, and just have that open discussion can say that. Now, it doesn't mean you let your guard down around categorization, pressure analysis, comparative framework. This is a business or a family decision at the end of the day, but it still needs to take frameworks into account. But it's about just being open to the sales agent about the truthful scenario. Absolutely.
I mean, this is a method you've been applying well before even InvestorKit became a business, right? I mean, you're a successful property investor and you have been now for many, many years. And if anyone tuning in hasn't heard of Arjun before, he's done a wealth of smart property investment shows with us. So if you want to hear his investment journey, he's shared quite a bit with us. And it's very interesting to see the different turns, positive and negative, might I add, that you actually have taken. But it's allowed you to obviously keep moving forward, right?
Definitely. And agent relationships have been a big part of that.
Absolutely. Now, speed and conditions. I'm keen on this one. I like this. Where's this going?
Speed is key, right? I mean, it gets said so often. And, you know, I think decision-making is critical. This is a very, very big decision. But when you think about speed, if you can't make a decision fast enough, then you have to look at not you as a person, but your preparation to get to that point.
Yep.
So I feel speed is just an outcome of great preparation. So when I think of it, I think of the journey with our clients. We've onboarded them through an understanding of them personally, their current portfolio, planning for the future portfolio, then having an understanding to go through macro areas, research of locations first. Then we go through a search for property specific to their brief, then a presentation of properties or property with the intel, on the ground videos, understanding of it. So you can see there's a journey here.
Absolutely.
So when it comes to making a decision in 24 hours, is it much of an ask now because of the preparation that has happened to date?
Yep.
But for buyers who aren't going through professionals, they aren't doing this level of preparation. They're getting on domain, REA, scrolling through, and then hoping to get something. And when you hope and you like something, now you go into due diligence mode and working full time. Is that going to happen in a day? So the speed comes through preparation and preparation comes through process, which is what we apply. Now, conditions, they're a very, very interesting story. In more than ever, your conveyancers are your best friends. And, you know, they have to be on the speed journey as well with you. I've seen many deals miss out simply because clients were saying, hey, look, let me work with my contact here, which is fine. And then we go to work with their contact. You know, they're out playing golf.
It's a bit of a nightmare.
Yeah.
Yep.
They're out playing golf or they're just too busy or anything like that. And this makes a big difference in today's market. So speed and now conditions is where if you can understand the pros and cons that come with finance or no finance clause, valuation clause, smaller deposits, bigger deposits, shorter settlements, longer settlements, these are all intricate parts of deal making. But they make a difference if you do two things. You ask the questions from the sales agent to see what's important, what would make a difference, and then you have a pro and con analysis to understand, am I willing to take this risk? Yep. Because there are risks with every condition you don't apply, but there are also opportunity costs on the other side if you continue to apply them. Because there are some markets across the country where, almost everyone is putting stuff without certain clauses in there. Are you willing to do that? If so, great. If not, this isn't the market for you. Mm-hmm. So the importance to understand is the pros and cons and the communication of what's important to the vendor. Sometimes a longer settlement and a rent back with a smaller price than the other person has gotten across on deals. So you can see that intricate understanding of the vendor selling something to buy something else. Well, let's play their terms for settlement dates or rent backs. The vendor has an urgent sale. Let's get this assured at settlement and work together with the bank or broker. The vendor wants to now achieve the best possible price. Well, okay, should we just put all the conditions we want? Because if they're really, trying to get this final price and we feel okay giving it, I want all the conditions because I want to make sure that I'm not stuck when it comes to finance or something.
Excellent. Well, on that note, look, what I would encourage to people tuning in, and I do mean with all due respect in this sense, you've bestowed a lot of knowledge on us just then, Arjun. And I would like to think that if you aren't applying what has been said in this podcast already to your investment strategy, journey, how you buy property, just how you go about the whole process, I would start, because in this market today, you need to have everything that we have just spoken about. If that doesn't suit you and that you don't have the time to do that, I would encourage that you get in touch with Arjun. He obviously, this methodology that you've had in place now for some time, it clearly does work. How do people get in touch with you, Arjun? The
best way to get in touch is campaign.investorkit.com.au. Just to repeat it, it's campaign.investorkit.com.au. And when it comes to what we've shared today, Tom, I totally, wanted to give the most value I could so people can, if they're in a position to do it themselves, really get it out there and do it yourself. I mean, these are the frameworks us professionals are applying. But if you feel time is getting in your way, fatigue is getting in your way, or the right resources to put all this together, it's not a one-man band for us to do this. This is a whole team and engine room behind us for meter quality control and really make sure we can support our clients with solid decisions. So you can see that when you are applying these, even if you may be up against, ourselves, which is a very competitive environment, and we're looking to apply these at scale. So I feel that if you're in a position to do these yourself, hats off and really nail it, give it a crack. If not, campaign.investorkit.com.au. You
just made a really interesting point just then. It's either do it yourself or compete against me. That's or they have to compete against you, Arjun. That's terrifying. I don't want to compete against you. But
look, it's 1 and 2, right? So I mean, we're not winning all the time.
Well, was that 55%? Was it?
Yeah,
55%.
Right there.
Well, Arjun, thank you so much for joining us today. Everyone tuning in again, if you would like to hear more of Arjun, as I said, we've had a lot of him on the Smart Property Investment Show. Please go listen to his journey. Go listen to his insights. Go to the Property Nerds. Listen to that podcast and get your fill of his knowledge and wisdom. Arjun, thank you.
Thank you, Tom.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.